How much medical insurance coverage would you need? The answer is the coverage should be equal to either a cost of a bypass surgery in your city or 50% of your annual income, whichever is higher. Now this coverage would be enough for an individual. For a family, you need to multiply the above medical insurance cover by 2. Next question is, how much could the premium cost? Now again, this depends on the benefit, your age and the coverage you want to take. For example, for a 30-year-old with no pre-existing disease, the premium would cost anything between 5,000 to 11,000 for a coverage between 3 lakh to 5 lakh. This is for an individual. For family, it would cost between 8,000 to 15,000. Next, what if your parents don't have a medical insurance policy and their age is above 50 or they are senior citizen? In that case, you have 3 options. First option is, if you are under employment, check the insurance provided by your employer covers your parents or no. If they cover, good enough. Second, what if your parents have taken a medical insurance policy long ago, but their coverage, or let's say the insurance cover or the base value is quite low. Let's say it's only rupees 1 lakh. Check if you can do a top up on that existing policy. Third, you could also start an SIP, call it a medical fund or an emergency fund and use it for your parents' medical expenses. Next question you could have is, what if I have a family business and none of you all have a medical insurance coverage? When I say now none of your family members have a medical insurance coverage. You could opt for a corporate insurance where it doesn't not only cover your parents but also covers your employees. It could be a good incentive for your employees as well, and it is the cheapest and the smartest way to cover your full family. Now that it is clear how much medical insurance coverage you need, the next step for you is to buy a medical insurance. Now buying a medical insurance in India is very complex. It's too technical and we have many options in the market which can get very confusing for you. But don't worry, I'm going to make it very easy for you by showing you key points to consider while buying a medical insurance. The first point for you to remember is premium price variation with age. What do you mean by that? You have to check with an agent what will be my premium at the age of 25, suppose you are at the age of 25, and what will be my premium, let's say at the age of 35. There should not be a big variation. Normal, good policy, let's say good policy for you to opt for is where the premium price is fixed for a fixed age bracket. Let's say your premium price is 100 for the age of 25 to 30. So that means 5 years the premium price is fixed. 31, the premium price will obviously increase, but it should not increase by 50% or 60%. That's why it's very important for you to ask the agent what is my premium price today and what will be my premium price in the future. Second, co-pay clause. What do you mean by that? Here you will be sharing the medical bill with your insurance company. For example, if you have a co-pay clause of 50% in the insurance policy, that means you have to pay 50% of the medical bill and then the balance 50% will be paid by the insurance company. Avoid this co-pay clause. There should not be any co-pay clause in your insurance policy. Third point, pre-existing disease. If there is any pre-existing disease at the time of buying an insurance policy, there will be some waiting period for which until then you cannot claim any medical cost for this pre-existing disease. Normal waiting period is about 2 years. Suppose if you have a BP at the time of buying an insurance policy, any cost related to BP you cannot claim until 2 years, right? Look for an insurance policy where the waiting period is not beyond 2 years. Standard waiting period is 2 years. Earlier the better. That means if it is 1 year, it's the best. If it is 3 years, don't opt for it. Maximum you can opt for is up to 2 years. Next point, there will be some specified diseases for which there will be a waiting period for you to claim. For example, let's say there's a specified disease called cancer in your insurance policy. Now, at the time of buying an insurance policy, even if you don't have cancer, God forbid it should not happen, on the third day after buying the insurance policy, you are diagnosed with cancer. Now, until 90 days, which is the waiting period, you cannot claim any medical cost related to cancer. Okay. So now what is the ideal waiting period? Normal waiting period is about 90 days. Maximum you can go to 180 days. don't opt for a waiting period which is about 1 year or 2 years. There's a difference: pre-existing disease waiting period and a specified disease waiting period. Okay, pre-existing, you already have the disease at the time of buying a medical insurance. Specified disease is you don't have that specified disease at the time of buying insurance. You're diagnosed with that specified disease, let's say after buying that medical insurance, but there's a waiting period. Okay, so there's a bit of difference. Pre-existing disease waiting period could be up to 2 years. Specified disease waiting period cannot be more than 90 days. Okay, maximum 180, but you cannot accept 1 year or 2 years. Okay. Next point is sublimits. What do you mean by that? Here there will be a limit up to which you can only claim, right? Let's say there's a limit on the category of the room. You can claim only for double occupancy AC room. If you want to opt for a single occupancy room, then you cannot claim the cost of single AC occupancy room. You can only opt for, or you can only claim for the cost equal to double occupancy AC room. Next is, there will be certain diseases which will be excluded in your insurance policy. Normal exclusion is cosmetic surgery and dental treatment. Be aware or be careful that pregnancy is not excluded, right? There will be some insurance policies where they will exclude pregnancy. Like I said, two normal standard exclusions they do is cosmetic surgery and dental treatment. The next point is pre and post hospitalization. What do you mean by that? Suppose you incur some medical expenses before you got hospitalized. Check if you can claim these expenses under this insurance policy or no. Same for post hospitalization. Suppose you incur some medical expenses post your hospitalization. Check if you can claim this or no. Normal standard period is coverage should be about 30 days for pre-hospitalization and 60 days for post-hospitalization. The next point is day care procedures. Suppose you incur some medical expenses but you have not got hospitalized. Then check if the day care procedures are covered under insurance policy or no. Most of the insurance companies don't give you this day care procedures coverage. If there's no day care procedure, check if you can have this limit. Check if the insurance company provide you about a limit. So let's say 10,000 is a normal limit. Say up to 10,000. If I don't get hospitalized and I incur medical expenses, then I can claim up to 10,000. Check if you have this limit or no. Next point is no claim bonus feature. What do you mean by that? Suppose you don't have any insurance claim for the year. Next year you should have either a discount in the premium or you should have an increase in the coverage with the same premium price. Okay, check if you have this feature in the insurance policy or no. Next point is claim settlement. You have to check the insurance company you opt for, what is the claim settlement percentage. If the claim settlement percentage is, let's say, 50 or 60% and the premium price is low, with all the features what I explained is covered, there's no point, right? Because it has only 50% of the chance for you to claim that settlement, right? So normal claim settlement should be about 95 to 99%. 100% for sure not possible, but 95 to 99% is a good percentage for you to opt for that insurance company. Next, if the premium price or if the premium amount is an annual payment, the frequency is annual payment, then, which is normally a case, most of the insurance company give you only option for annual payment. First year you have no choice, you have to pay annually. Second year, what you can do is, though it will be annually, you can opt for you can go for an RD, recurring deposit, where you split the annual amount by monthly. The benefit of that is, like I said, you split. The second thing is you earn some small interest, right? It could be, you can treat that interest amount as a discount. I hope I was able to explain you why having a medical insurance is essential to protect your investments. It plays a critical role in financially securing you and your family. I've also simplified the process of buying a medical insurance. You just have to remember the points that I've shared before. Please get one if you haven't got one. Hit the like button if you have enjoyed this video. Share it with your family and friends and subscribe to my channel if you haven't already. See you in my next video. Until then, take care. Bye bye.